Hello everyone, and welcome back to the channel. Today's video focuses on a topic that is being widely discussed across the United States, the financial pressure many middle-class households are experiencing and why this concern continues to grow. For decades, the middle class has been viewed as the foundation of economic stability in the U.S. However, in recent years, many families feel that maintaining a stable financial life has become more difficult. This feeling is not based on a single factor, but on a combination of rising costs, income pressure, and long-term financial obligations. One of the biggest challenges facing middle-class households is the cost of living. Expenses such as groceries, housing, utilities, transportation, healthcare, and insurance take up a significant portion of monthly income. Even when prices rise slowly, higher costs tend to stay in place, which puts ongoing pressure on household budgets. Housing plays a major role in this discussion. Rent prices, home values, property taxes, and mortgage rates all affect affordability. For renters, limited housing supply can keep prices high. For homeowners, borrowing costs and maintenance expenses add to financial responsibilities. Because housing is often the largest expense, it strongly shapes how secure families feel financially. Income and wage growth are another important part of the conversation. While employment levels may appear steady overall, many workers feel that income growth does not fully match rising expenses. This gap can reduce purchasing power and limit the ability to save or invest for the future. Debt also weighs heavily on middle-class finances. Credit card balances, auto loans, student loans, and mortgages often exist at the same time. Managing these obligations alongside everyday expenses can be challenging, especially when interest rates remain elevated. Healthcare costs add another layer of concern. Insurance premiums, deductibles, and unexpected medical expenses can quickly disrupt even carefully planned budgets. For many families, healthcare remains one of the most unpredictable financial factors. Education and childcare expenses also affect financial stability. Tuition costs, student loan repayments, and childcare fees can limit financial flexibility and delay long-term goals such as home ownership or retirement planning. Consumer confidence reflects these pressures. When families feel uncertain about their financial future, they tend to reduce discretionary spending, delay major purchases, and prioritize savings. These behaviors influence broader economic trends and are closely monitored by analysts. Financial markets often appear in headlines, but market performance does not always reflect the lived experience of middle-class households. Market movements can be driven by corporate earnings and global events, which may not directly improve household finances. Government fiscal policy and public finance discussions are also part of this topic. Budget planning, taxation, and public spending priorities influence long-term economic conditions. These discussions take time and involve multiple stages before outcomes are finalized. Global economic factors also influence domestic finances. Energy prices, international trade, and geopolitical developments can affect costs and economic planning within the U.S. Because the economy is interconnected, external events often play a role in household finances. Technology and workplace changes continue to reshape income opportunities. Automation, remote work, and evolving job requirements can create new opportunities while also introducing uncertainty for some workers. Savings behavior provides insight into how families view their financial future. When uncertainty rises, households often focus on building emergency savings and reducing risk. Changes in savings patterns reflect broader confidence levels. It's important to recognize that financial well-being depends on both economic data and personal circumstances. National indicators provide a general picture, but individual experiences vary widely based on income, location, and family needs. This channel aims to explain why financial pressure feels persistent for many middle-class families and how different economic factors connect. The goal is to provide clarity and understanding without exaggeration. Thank you for watching and spending this time with the channel. As financial discussions continue to evolve, Updates will be shared here in a clear and responsible way.